All right, this clip is for those of you who own a home right now and are considering whether to refinance. Rates have dropped significantly. I know you've seen it and you're like, oh my gosh, should I refinance? Should I lower my interest rate? If you purchased in the last couple of years, now's really a great time to look at those options. So what do you consider? Well, number one, okay, are you gonna keep the house for the long run or the short term? If it's a short-term hold, like 2 or 3 years or something like that, get a no closing cost refinance quote. Because if it doesn't cost you anything to lower your interest rate, why not do it, right? Makes sense. You're going to save money, and then you're going to sell the house, and everything you've saved between now and then is yours, okay? But if you're going to keep it for a longer period of time, you really should pay closing costs because you want to get the interest rate as low as possible. You see, closing costs and interest rate, they're like this, a seesaw. So the higher you pay in closing costs, the lower your interest rate's going to be, okay? The longer you're going to keep the house, the lower your interest rate should be so you can maximize your savings in the long run. If you're not selling the house in the next few years, it doesn't matter as much that you're paying closing costs because you're going to recoup the gains in the long run. So think about that, okay? Also, if you're refinancing, you should consider shortening the term of your loan to a 15-year loan or shorter if you have the capacity to make the extra payments or the higher payments. Okay, why should you do that? Number one, you're going to save a ton of interest just by shortening the term that it takes you to pay off the loan. But number two, the interest rate options are much lower on shorter term loans than they are on 30-year loans, okay? So you want to look at that, maybe talk to your financial advisor, get some advice and see if you can handle that extra payment. And then lastly, rates are erratic, right? Do you lock in now or do you wait? Do you think that rates are going to drop even further? Look, none of us know what's going to happen in the future. You should lock in your gains as soon as you feel a victory, okay? Now, one way you can mitigate the possibility of rates dropping in the future is just get a low or no closing cost refinance right now, and then you can possibly refinance again in the future. Again, only if you think that rates are going to drop again. That's a good strategy because you can refinance an unlimited number of times, and if you're not paying closing costs in each time, you're not really stripping any equity, okay? So that's one way to mitigate the possibility of rates dropping in the future, but definitely lock in the gains when you see them. Good luck.